Elliott Practitioner is live trading a major stock index. Elliott Practitioner is live trading a major stock index. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders for Elliott Trading. Our website is www.24elliottwaves.com. The title of this video is Elliott Practitioner is live trading a major stock index. All right. So here we are. The time in London is 22 minutes past 2 p.m. on the 8th of October 2015. In New York, 9:22 a.m. All right. In Australia, that's midnight 22. All right, midnight 22. So good night to our friend in Australia. All right. So in exactly 8 minutes, the New York Stock Exchange will open. And before that, I want to prepare myself, okay? So the preparation for day trading, preparation for swing trading, preparation for investment is very, very important. So without any preparation, okay, it's not a good start. So we want to prepare ourselves before the market is open. And today, I want to live trade the Dow Jones, okay, using the Elliott wave principle, all right? So the first thing first, so during the preparation, I'm looking for a trading setup. So yesterday, I have traded, okay, Dow Jones, okay, and I recorded a video that I posted at 24 Stock Trader. The title of that video was how to day trade using moving averages, crossovers like a pro. In that video, I was using a candlestick bar, this one, and another one here, okay, to highlight, okay, a trading setup. But today I want to use, okay, an Elliott wave pattern. In this case, I want to use, okay, the expanding triangle. Yeah, so without, okay, talking too much, all right, I have done some homework to save time. My apologies to traders. The pattern that we have seen is what we call the ABCDE Elliott wave triangle. My apologies to traders. ABCDE Elliott wave triangle. So, if you do not know, okay, about the expanding triangle or the ABCDE Elliott wave corrective pattern, all right, I will recommend to traders to watch, okay, the video that we are calling Elliott wave Dow Jones Trader is using expanding triangle like a pro. I will put it in the description section. So check it out, okay, in the description section, okay? Very, very important, okay? All right. So I will not go too much into detail about, okay, the pattern ABCDE. All I will say to you, what the video that we titled Elliott wave Dow Jones Trader is using expanding triangle like a pro. All right. So here we have an expanding triangle being formed. All right. That's the A, B, C, D, E. We are in the section of the E of the pattern. And our expectation is that the price will continue to go up to retest the upper side of the expanding triangle. Now remember, our expectation does not mean that the price will do exactly what we are expecting. But in order to control the risk, we will use what we call a top-down trading method. I will also put in the description section the video about what is a multiple time frame, okay, trading method, okay? All right, so check it out too. All right, so here, this is my preparation. So this is what yesterday candle, because you can see that the market is not yet open. All right, so talking about live trading, it will begin soon when the New York is open. My plan is very simple, okay? I want to buy Dow Jones today based on this setup that a pattern is being developed, but the pattern is not yet completed. Looking at the pattern, the price is continuing to go up and is trying to retest the upper side of my expanding triangle. All right, this is my expectation. All right, I will use a top-down trading method, okay, to trade it. So by using a top-down trading method, I will avoid, okay, mistake. I will avoid fighting the market or trying to, okay, impose my expectation on the general market, because I'm not the only day trader in this market. I'm not the only Elliott practitioner in this market. Okay, all right. So the next thing that I can tell you now for my preparation, when New York is open, all right, it may gap up, because if it's bullish, sometimes you may see it gap up fast because you want to reach the target very fast. My strategy is very simple. The first 30 minutes when New York is open, I will just watch the market, because order will be filled, okay? The new orders in the market need to be filled first. These are not real trading activity. So I'm just going to be very patient. Maybe I'll play my best computer games, okay? All right? And or drink tea or coffee or something like this, and just relax until the first candle on a 30-minute chart is completed. Once that candle is completed, like a professional trader, I'll come back, okay, and monitor, okay, what is happening. So you will see me, I'll try to enter the trend live here. But talking about entering the trend, there are three things that we consider when we are going about to enter a trade. We talk about the time of the day, all right, the time, the place, and what is happening. So if you think that, Joe, you are talking about something that I do not understand, I'll recommend that you check the video that we call Things to Consider Before Entering a Trade. I will also put a link in the description section, so you may check that video out, okay, and understand, okay, the things that we consider, okay, before entering a trade. I will apply it today in this video, okay, talking about an Elliott practitioner is live trading a major stock index. In exactly 1 minute or so, now the market is now open. My clock is a little bit behind there, so you can see that the market is now open. The first candle is now out here. So I will switch, okay? So my strategy is very simple. I want to buy, but before, okay, because I have to wait 30 minutes, I'm going to go back to the daily chart. I want to show something to traders here. The daily chart, okay? So I'm on the daily chart. I'm going to draw some line, because we are talking about the place. We're talking about, okay, things we consider before we enter the trade. If the market is going to be bullish today, okay, all right, pay attention carefully to what I'm going to say. The prime will display a new high. So the level that the professional will be watching carefully is the high of yesterday, all right? So I will put a line there. I will call that line into turquoise. Okay, that's the line here. And I will also highlight, okay, the low of yesterday, because professional watching the low. If it dip below of yesterday, it become bearish, yes or no? All right, so I'll color the low of yesterday into pink. I have too many lines, but stay focused, please, because we're going to switch time frame and go to the 5-minute time frame, and we're going to trade around those key levels. There's another line that we draw, talking about trading idea, part 1, part 2, part 3, part 4, at www.best-trading-strategy.com, www.tstwsyS008.com. Trading idea part 1, part 2, part 3, part 4. Check it out. Very, very important for TST traders. All right. We highlight the high, the low, and the media line. Okay, so I want to highlight again the media line of yesterday, because I'm a bullish trader. It will be nice it will be nice for the price to pull back during the first 30 minutes to retest okay, the media line of yesterday, and then from there to give us a clear-cut bullish signal somewhere near the media line. Why I want it to pull back when I want to buy? I want it to pull back because if you want to buy, we want to buy low, yes or no? All right, we want to buy low and we want to sell high. Okay, if you meet a professional trader, experienced trader, they will tell you that. Sell high, buy low. Now, practically, this is what we are doing here. All right, so this is it. So, but remember, the bottom line is that I moved a line now that I do not want to move. Okay, it's gone now, finished. Okay, all right. Okay, the bottom line, my friend, is that, okay, if we want to buy, okay, we want to buy at a support level. If you are buying at a resistance level, the price must break above the resistance level and convert that resistance level into support level, okay? Very important, if you want to sell at a resistance level. And if you are selling at a support level, the price might be below that support level and convert that support level into a resistance. But for the purpose of this video, the bottom line for my trade is the pattern. The foundation of this video is an expanding triangle that is being formed, and we want to take advantage of it by looking for an opportunity to buy the Dow Jones. This is the key. So when we are day trading, all right, the key or the foundation of our trade, the number one thing that will make our trade successful is the trading setup. If we have a useless trading setup or a risky trading setup, this is a bad start. The next thing that we want to check, remember the time. So if we are talking about things to consider when we are about to enter the trade, the time, the market environment. So today is Thursday. Which economy news is due very often on Thursday? Okay, check it out at Forex Factory. Go to Google Finance and check the economy news. The economy news can change the dynamics of the market. So we are technical traders, but the market environment, okay, you remember the story about the barbecue. You have to make a barbecue, all right? You want the weather to be beautiful, all right, nice. You don't want to do your barbecue when it's pouring down, okay? All right? Clear sky, okay? So the environment is very important. So apart from the setup, the verification, the area weight pattern, everything else, the market environment should be suitable for us so we may profit from it. You want to sow at the right season. If it's a harvest time, well, it's a harvest time. Don't sow during the harvest time, all right? It won't work. So we do the same thing when we are trading. So now, technically speaking, we have noticed that we have an expanding area weight pattern, okay, being formed. And there is a high chance. So talking about trading, live trading, we are talking about a probability. The probability is that the price has a high chance to go up. Okay. What will happen if it's not going up? It will display lower lows, lower high on every time frame, bringing us back to the market pattern. Every time frame we switch to, we must adhere to the market pattern. So this is just my preparation. The market is now open. It's now 4 minutes since the market is open. So I'm going to switch my time frame. I have my line ready. Remember the line that I've drawn. So I hope I will be able. So we have this turquoise line, which is at the high of yesterday. And we have also this pink line below the red line, okay? And we have this black line. It's a dark green, in fact, which is in the zone of the median line of yesterday. And these are the level I want to watch if I'm about to enter the trade. So now I'm ready to switch to the 5 minute. I'm going to use the 5 minute time frame for my entry and at the same time for my signal. All right, this is what I'm doing now. The trick about top-down trading method, we must use a minimum 2 times frame. Minimum 2 times frame. I can use 3 time frame, but because I have, okay, a clear cut, okay, area weight pattern being developed, a lot of traders, a lot of area weight practitioners may already know it, and the price may go a little bit fast, okay? So I want to use a 2 times frame. Experienced trader can use 2 time frames. If you are a new trader, I recommend that you use 3 time frames, all right? Swing traders must use 3 time frames, all right? Experienced day trader can use 2 times frame. But you must want to understand what you are doing. The best approach is 3 times frame. The signal, the setup, the signal, and the low risk entry point, okay? So the market is open now, okay, my friend? It's open beautifully. So some trader will just go down, they will buy. Don't do that, okay? Don't do that. Why are you buying? Market just open, order is being filled, you just buy. Where is the market going? You don't know. You want the market to reveal to you what the market is doing. Yesterday, you see, it opened here, it went boom, 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 up. Everybody sees going up. We want to buy, everybody is somewhere here. Okay? So You can check it out, the video that I recorded yesterday, how to day trade using moving averages, crossovers, like a pro. All right? Okay? All right, so now what we are doing, we are just monitoring what's happening. All right, it may take 1 hour, it may take 30 minutes before we see a clear-cut signal. Okay, it may take some time, but the price will do what the price will do. But all we do is to wait and see. All right, okay. So to avoid that the video is too long, my friend, we will pause the video for the first time after 15 minutes. And we'll come back to it and see what is cooking, so to speak, here. All right, is he ready or is he not ready? Okay, so I color it now in turquoise. Okay, the vertical line that I use. So you remember the line that we draw on the daily chart, the turquoise line. That's the high, near the high of yesterday. This is the median line of yesterday. That's what the price coming to now. And we have the low of yesterday, which is here. So all the lines that I've drawn on the daily chart, talking about trading idea part 1, part 2, part 3, part 4, and they are all here for me to see on my 5-minute time frame. And this will allow me to make my decision around those key levels. And also, now we are on a 5-minute time frame. The question that we must ask is, what is the current market pattern? All right. So what I'm going to do, I'm going to do something that some trader may find a bit strange. I'm going to go to the 10-minute time frame because I want to see more data. You see here, when I'm on the 5-minute time frame, I can't see enough data. You see, I'm only looking at this. But so I want to see more data. I'm going to the 10-minute time frame. So you see, on the 10-minute time frame. So on the 10-minute time frame, I can say that we have a bigger channel. So the price went up yesterday to the high here and then pulled back to the lower part of the channel here. See, so the top of the channel is the high of yesterday and the lower part of the channel is the low of yesterday. And the median line is right here. So we can say that yesterday the price went all the way up here, come back down. Is it going to oscillate within this channel? So I can say that on my 10-minute time frame, there is a bigger channel being formed. So the best place to be bullish is above, okay? The safest place to be bullish is above, okay, the high of yesterday. All right? But remember, when we have an horizontal channel, okay, the low risk entry place to enter the trade is the lower part of the channel. So will the price come all the way to the low of yesterday before going back up? Or will it find a support near the median line? We will see. So let's pause it now and come back to it. So I'm going to go back again to the 5 minutes and I will put my vertical line. My data is now disappeared. Okay, it's back. All right. So what's going on here? So here, the vertical line, you see the vertical line, and the time in London is 39 minutes past 2 p.m. Okay, that's 39 minutes past midnight in Australia, and 39 minutes past 9 a.m. in New York on the 8th of October 2015, recording live a video using okay, the Elliott wave expanding the triangle to forecast what the Dow Jones Index is likely to do. So let's pause the video for the first time and we'll come back to it very shortly. So speak to you very soon. Pausing the video for the first time. Okay, traders, the first 30 minutes is gone. So if we go back to the 30-minute chart, so this is the first candlestick bar on the 30 minutes. You can see that the price went down to retest the median line of yesterday. Okay, so it went down to retest it, but it closed bearish. Okay, you can see here it closed below the opening price. All right, so I'm going to go back again to the 5-minute time frame. All right, so on the 5-minute time frame, all right, I'm going to draw a channel. Okay, so we have all right, a low here, a higher low being formed. And remember this level. So it's the safest place to be bullish, to break above it. But in my view, I'll prefer the price to come back down again because I'm not very convinced, because on a 30-minute chart, this candle is quite bearish because price went down all the way to the median line, but the candle closed bearish. Okay, I would prefer it to be completely a candle like this one here, to come down, straight down, and to stop there before this candle begins. But you can see that it went all the way to the median line, something they bought it, but this candle closed bearish. So I want to be a little bit patient. Alright, this is about what is happening. So the time, the place, alright, and what is happening there. Okay, we are looking at the price, analyzing what is happening. Okay, so I would prefer it to come back down again, alright, to form a kind of a double bottom somewhere here on the edge of this channel, and from there we'll take it up. Okay, that will make more sense, which means it's validating the median line at a support level. Okay, let's draw a line here. There's a kind of resistance here on the 5 minutes, so let's draw a line there and wait and see what the price will do. Okay, so going up a bit now. I'll pause the video again, alright, and we will come back to it and see what's happening here on the 5-minute chart. Okay, talking about an Elliott wave practitioner is live trading a major stock index. Okay, the stock index that we are trading is the Dow Jones Index. So I prefer it to come down again and form a kind of double bottom chart pattern on or near the median line, and that will give us more confidence to look for an opportunity to buy the Dow Jones. All right. One thing also today must understand, because if the price going up, it's healthy for the bullish trend that the price pull back. So you see here, it went up and then pull back, and then it went up and then pull back. Okay, that's what you want to see. So because yesterday was on a daily chart, it was a bullish candle, here on the daily chart. All right, today we want to see a bit of pullback, and then before we start going up again. Okay, it's healthy for a bullish progression. I'm going to switch back again to the 5-minute time frame. Remember that our setup is an expanding triangle, that we have noticed on the daily chart. All right, we highlight the high, the low, and the median line of yesterday candlestick bar. Now we switch to the 5-minute time frame, looking for a low risk entry point. So we are looking for an opportunity to buy the Dow Jones Index. We must consider the time, the place, and what is happening. So the place is the median line. All right. The time now is 15 minutes past, it's 11 minutes past 3 p.m. in London, and now it's changed to 12 minutes past 10 a.m. in New York. All right, the first 30-minute candle is closed when New York is open. We are now waiting and see, we are waiting, for the market to show us, the direction. Okay, so pausing the video for the second time, and we'll get back to it very shortly. Speak to you soon. Let's continue with our recording, traders. We pause the video right here where I place the vertical line. As you can see, the price went down to retest the edge of this trend line here. Okay, I'm going to color that trend line now, into orange. All right. Here it is. You see the trend line, a low, a higher low, a higher low. Now is retesting the same higher low somewhere in the zone of the median line of yesterday. Talking about Elliott wave count, we have here yesterday the price gush out. I move a line now. All right. We see yesterday that the price went up, all the way up to the high of yesterday. And then he canceled it. He canceled the whole bullish move. All right. talking about Elliott wave count, and then you see the price went up and then pulled back. And here we are talking about Elliott wave count. We see something like this. Feel free to disagree with my wave count, and then pull back a bit. On the lower time frame, my wave count can be a little bit tricky. And then we have another move like this. Alright, feel free to disagree with my wave count. Alright, and then we have another move like this, okay? So here it is. So if we say that this was the original first wave, and now the original first wave has been cancelled, when a wave is cancelled, we must restart counting the wave. Alright, so there was this move, and it has been cancelled. Now a new move has been started, and it went up, and pulled back, and it went up, now it pulled back here, and now we have 5 waves. Now we have what? A triangle being formed. Okay, my friend, there's a triangle here. Pay attention to the orange triangle here on the 5-minute time frame. Okay. In fact, the triangle is starting here. Okay, the orange triangle. If you want to know more about how to count Elliott wave and the guideline that we follow, you need to go to www.24elliottwave.com. So price went up first and then cancel, okay, the bullish move and form a double bottom pattern, a validation of a support level. A new move has started here, and then 1, 2, 3, 4, 5 waves. Now we are having, okay, the second wave, which is a triangle. All right, which triangle do we have here? This is an ascending triangle. An ascending triangle, all right? Here it is, all right? Higher lows on the edge of the lower part of the triangle, okay? So in normal condition, we expect, okay, Dow Jones to find a support if it's going to be bullish. Repeat, if it is going to be bullish, to find a support on the edge here and to continue the move, okay, to the upside, to break out of the consolidation. So we can look for opportunity to buy on top of the consolidation here, and some trader will place order here to sell on the lower part of the consolidation. So it's critical for us that the price find a support here, and if we find a support, I'm waiting for a bullish candle to turn around here, and after that candle I will enter the trade. That remains to be seen, okay? So we just wait until we have, okay, a clear-cut entry point. So a new candle has started now. You see this one, it went up all the way here, but was sold and the price closed a little bit bearish. So if this one closed bullishly, we don't want it to go too far, we don't want it to run too far away. That will give us too much trouble, because we don't want to use too much stop loss. We want it to close somewhere to be bullish, but to close somewhere near on the edge of this bullish triangle, all right? It makes sense? All right? So I'm talking about, okay, an external triangle. This is the A, okay, A part of the ascending triangle. Feel free to disagree with my wave count. That's the B part of our expanding, our ascending triangle. This is the C part of our ascending triangle. And now we have the fourth part of our ascending triangle. And now we have, okay, the E part of our ascending triangle. So this is A, B, C, D, E. All right? Is an ascending triangle. All right? Forming higher low on the edge. All right? So I just don't want this candle to be too tall, all right? Because there's a high shot that a lot of Elliott wave traders will spot this ascending triangle and they will be buying here big time, okay? I don't want it to go too far, because I want it to close somewhere very close to this, to the edge of this trend line here, and I can buy after this candle, placing my stop loss below this one here. It makes sense? So yesterday we see on the 5-minute chart, okay, somewhere near a key level, okay, see here 16801 is the key level. So price was in a consolidation. Then we have this bullish progression. So today we say first wave breaks out of a consolidation zone. But look, the second wave has cancelled it. Now, as the second wave has cancelled the first wave, we must restart counting the wave. Now we say, okay, first wave now has been cancelled again, forming a double bottom chart pattern. Okay, as you can see, what I'm labeling the first wave, I will put a question mark on it because it didn't break the knot of the double bottom chart pattern. Are you with me? Okay. So what I'm calling here first wave, because it didn't go above this level here, I'll put a big question mark on this first wave. So this will be my first attempt to count waves. So I say, okay, let's see what's going to happen. So 1, 2, 3, 4, 5. So this is my new first wave. Okay, let's color it now into pink to please the ladies, because ladies can trade better than men. All right. Okay. All right. Right here. So this is my new first wave. Breaks out of the consolidation, not convincingly, but okay, let's label it first wave and see what the price will do. If we are wrong, the most important thing is what? We don't want to violate the market pattern. So there is a bullish trend now here. Once this candle is closed bullishly, I will buy the Dow Jones. That will be my entry place. So talking about the place is near the median line of yesterday. All right, the time is 32 minutes past 3 p.m. It's still within the first 2 hours when a market is open. All right, check the economy news at Forex Factory, Google Finance, what is happening, what other traders are thinking. Check the market environment. This is about the time. Now what is happening? There is an ascending triangle being formed after a bullish progression. A triangle very often, especially, okay, the ascending triangle, is a continuation pattern, okay? But we don't want to assume anything. Some trader will place order here to buy, some will place order below here to sell. So if it did below this level, this order will be filled, and the price will rise down. You'll be wondering, what's going on? What's going on? Be bullish and bearish together, okay? So we're waiting to enter the trend. Once this candle is closed, or it's going to close soon, I will buy Dow Jones straight away. Going to put a line there. I don't want it to go too far away, okay? It's going a bit too. Bring it back down a bit, okay? Because I want to buy low, please. Okay, see, all right? Because if everybody sees it, okay, now it's completed. Now I'm buying the Dow Jones at 168.94, okay? 168.94. It's a green line here. Hold on a second. Done, okay? Done. Okay, we are now in this trend. Beautiful. Okay, now 168.94. Entry point. Okay, I'm going to hide my stop loss below here. Let's see how much you cost me. Yeah, 39 pips. Okay. That's 29 pips. 29 pips, okay? Okay, 29 pips, not bad, okay? Reasonable, okay? I don't want to go over. So now we are in this trend beautifully now. Put my stop loss in red, okay? Now you see it. Okay, so it's done now. Okay, the waiting time is finished now. We are now in this trade, and you can see this candle is beautiful. See, this is a bullish candlestick pattern. You see here, it went up all the way here, closed bearishly, followed by another bullish candle. This is a reversal candlestick pattern on the edge of a trend line. We have an ascending triangle being formed on the 5-minute chart on or near the median line of yesterday. We take it from here and give it a chance to pay us beautifully. All right, you see now? It makes sense. The time, the place, and what is happening. And most importantly, be very, very patient. Now that we are in the trade, we manage the trade. Where is the first and nearest resistance level? It's just right there in front of us, okay? Right there in front of us. Our expectation is that the price will break above this resistance, because if it does not, we are under pressure. Okay, we can decide to close the trade straight away and run away, all right? Or we may, okay, decide to be taken out. One thing I say to traders, always stick to the 5% money management rule. So you must not, okay, risk more than 5% of your trading account. So if you open 100 trades, the total amount that you are risking on all these 100 trades must not exceed the 5% of your trading account. With that information, you are good, okay, to remain in the market for a long time instead of coming in, okay, and the market send you out. It's not good, okay? You want to stay in the market for a long time. So I waited that this candle is closed before I enter the trade, okay? 16894, okay? It's not a bad place, okay? We have been patient, so the time now is 36 minutes past 3 p.m., all right? So an hour is gone now since the New York is open. Two candle, if I go back now, okay? Bear with me 1 second. All right? So, if we go back to the 30-minute chart, okay, this is what has happened, okay? So first candle, okay, went down all the way to retest the media line, talking about trend idea part 1, part 2, part 3, part 4, to retest the media line of yesterday. Okay, the media line divides the candlestick by into two zones, the bullish zone above and the bearish zone below, okay? So it stay above the bullish zone, all right? It stay within the bullish zone, drop it down, but it closed bearishly. That's why I was not excited to take the trade straight away. I want to pull back. And the market was very nice with me this time. Look, it pulled back and I put here an inverted hammer, okay? Nice. Followed by now, you see here, on the 30-minute chart. Down, see, it went down first with a tail, now it went up again with a shadow. This is a powerful reversal pattern. Tail down, tail up. Powerful reversal pattern. Now we are on the edge. The place is good. Media line of yesterday. The time is good. What is happening is good. We see what we call an extending Elliott wave, a triangle. All right, but remember our setup first was a what? An expanding triangle on the daily chart. So our expectation. So remember what we have done on the daily chart. We see an expanding triangle. Our expectation is that the Dow Jones will continue to go up to retest the edge of the triangle. But in order to control the risk, we are using a top-down trading method. We switch to the 5-minute time frame. We want to check the time, the place, and what is happening. We have done that. By doing that, we are very patient, and we are not violating any market pattern anywhere at all, because it will keep us in line with the price, and to avoid that we are fighting the market. Anytime you have a losing trend, draw your market pattern and see what has happened, okay? On any time frame, see it, and you will see that this is powerful, okay, stuff, okay? Now let's go back again to the 5-minute time frame. And it's looking good, okay? It's looking good. 29 people we are risking this trade. It's not bad, okay? It's not bad. Normally 30 pips, but 39 is nice. Very nice. Very nice for Dow Jones, okay? Reasonable for Dow Jones. So we come to a resistance. So some trader will take profit here. High frequency trader will take profit here. But if my wave count is correct, if what I've labeled here is an expanding triangle, truly, what is the first target? You know how to set target for a triangle. So here we are. I want to show you now. So a triangle that is an ascending triangle. Ascending triangle. Is my pronunciation good? Okay, put in the comment section, all right? Trader love to talk about my accent. So, ascending triangle. Ascending triangle. Which one? Okay, let's move on. Okay, so now you see the triangle here. So this is an ascending triangle. Enough with my jokes. This is to make you laugh a bit. And so you can stay on and watch the full length for this video. So if you see the triangle like this, okay, so first thing first, we have a bullish progression, okay, which one? This one. 1, 2, 3, 4, 5. A multi-wave. Now we have an extended triangle being formed. Now we are under pressure. It must break out and continue. If breakout continue, what is the first target? The first target is, okay, the height of the triangle, this distance here. Okay, let me show you. So you move this distance and put it at the top here. That's the target. So for my triangle here, this is how you set it. So the height, this line is not a straight line, so I'm going to draw another line. A straight line for the height of my triangle. In fact, I think I went a bit too far. Somewhere here, okay? It's the height of my triangle here. So we'll place our target there. Okay, you enter the trade, you want to manage the trade. So I will say that there is a high chance that for this trade, that the Dow Jones will slowly but gradually reach this level in normal condition. Does not have to. But in normal condition, this is the normal target for a breakout out of this triangle. It does not have to. Price going up, so first target is this level. Some traders are taking profit. Does it mean that the price will definitely go up? Well, if it's going to go down, you see it come down out of the channel, and you know that it's going down. All right. You see now, you set the target here. So I'm going to place another line there. So here it is, the greedy bullish target, a little bit above this resistance. So be aware of this resistance in a zone of 169.59. Okay. So don't ignore it because of the other target. Okay. And also you want to see, so we enter the trend, okay, at 168.94. If we come, okay, all the way here, okay, at 169.80, okay, that's 84 pips, am I right? Okay. 169.80. That's correct. That's 86 pips, isn't it? 86 pips, yeah? Am I right? 86 pips. All right, more than 80 pips, okay? More than 80 pips. That's a lot for day trading. So, whenever I'm risking 30 pips, when I reach 50 pips, I can bail myself out, or I want to secure my gain. All right? 50 pips for 30 pip risk is great, all right? But we will see. I want to give it a chance to run, okay? So once again, my friends, to avoid that the video is too long, because we are talking now for 42 minutes. Yesterday we pushed it a bit too far. I hope you like it. So I will pause the video again. All right. So this exercise sometimes is important for traders that are day trading. So they may see their mistake and see also what they are doing right, and see what I'm doing wrong, okay, what I'm doing right, and together we'll learn from each other, okay? So game on, okay? Pausing the video for which time? Third time or fourth time? Let's say third time, okay? I'm losing count of how many. So the time now in London is 44 minutes past 3 p.m. In New York, 44 minutes past 10 a.m. Okay, that's 1:44 a.m. in Australia. Okay, so pausing the video for the third time, and here it is. We are on a 5-minute time frame, and we'll come back and see whether, okay, I am rewarded or not. Okay, if it's going a little bit too far, I will show you what's happening. I'll say pausing the video for the third time. Speak to you soon. And let's continue with our recording. As you can see, we pause the video here where I place the vertical line, and we set a greedy bullish target in a zone of 169.80, but we also acknowledge another resistance on the hourly chart in a zone of 169.59. Okay. Since we paused the video, you can see that the price went down. You can see it came quite close to my stop loss, trying to retest the moving average 50 here, moving average 15. Okay, so but it couldn't touch it, which is great. All right, so we can imagine that there were first some traders trying to sell here. These are Fibonacci traders, okay? Because if I use now Fibonacci retracement here, you can see that at the top of the, you see we have 61.8% Fibonacci retracement level in this zone. So some traders were selling here, and they were looking at a triangle being formed at 61.8% Fibonacci retracement zone. And some of these Fibonacci traders can be quite aggressive, and they can mess up a trade for traders, okay? It's good that they did not mess up this trade for me. All right, so we are now above the triangle, so the price is heading towards the ultimate target in the zone of 16980. We are aware of this resistance here at 16959. Okay, so when it's approaching the zone, okay, I will assess what is happening and I will decide from there. Okay, so far so good. The most important thing, we are out of the ascending triangle. So we pause the video again for the 4th time, and I will come back to it. This is to reduce okay, the duration of the video. So before we go, let's place a vertical line here, you see, and the time in London is 41 minutes past 4 p.m. in New York, 41 minutes past 11 a.m. In exactly 19 minutes, London will be closed. It will make sense if we get paid before London is closed, because we don't want to leave this trade open after London is closed. All right, so we are watching the time of the day, and this will allow us to manage the trade. So it will be nice if we head straight away at least to the zone of 16959. We cash out before London is closed. Okay, so speak to you soon. Pausing the video for the 4th time. Okay, traders, London is now closed. Okay, so that's 17:02, 2 minutes past 5 p.m. The London stock market is now closed. This is a very important, okay, time of the day, because we are now heading into the gap period. All right, so until the last hour, okay, of the New York stock market. Okay, so in that condition, because I'm still in this trade, it's working nicely now, okay, beautifully. So I need to manage my trade carefully, all right, because of the time of the day, and my expectation that it should run fast, so we get paid and okay, and go home. All right. Okay, so this is what's happening here, just to show you. So we pause it here. It went down a bit, okay, and then it's heading up a bit, so picking up a bit of momentum. So we will see how this develop, so we can wrap it up and stop this video, okay, because as London is now closed, professionals are a little bit careful now. Okay, it's a different environment. So but so far we enter the trade at 16894. So all right, so it's working beautifully. As you can see, okay, I have my 50 pips already. I can come out now, but looking at the let's go to the hourly chart. This is the hourly chart of the Dow Jones. All right. Okay, there's a bit of resistance. We are heading toward the resistance zone. I want it to come a little bit near this level here. Okay. If we go to the 10-minute time frame, you remember this level here, this resistance here. That's what we see on the hourly chart. So we wanted to push it a bit closer to this level. Then I will just close this trade and then okay, and wrap it up this time, because the ultimate target is in fact at 16980. But because the price was a bit slow, all right. So what I will do now, I'll pause it again, all right, for a fifth time. Is it fifth time or fourth time? Okay, fifth time, and we will come back to it. Okay. So the time in London now is 5 minutes past 5 p.m. In New York, 5 minutes past 12 p.m. This is the lunch time in United States. I'll keep my eyes on it, okay, and because I don't want to wait too long before I get paid, okay. All right. So let's give it a bit of chance and see whether it's going to come a little bit higher here. Okay. So pausing the video, I'll go back to the 5-minute time frame before we pause the video. So I'll move my vertical line here. So pausing the video for the 5th time. Speak to you soon. Okay, traders, it's time to close this trade. Okay, closing out at 16954. That's enough for me. All right, you don't want to be too greedy. All right, you will continue. You will hopefully go all the way to the target here, but checking the time of the day. All right, that's enough for me for now. Okay, so all right, 16954. We enter the trade right here at 16894. Set our stop loss 29 pip below the red line here at 16875. Okay, greedy target at 16980. All right, conservative target at 16959. Okay, come out now. Okay, at 16954. That's enough for me. Happy with this trade. Beautiful trade, gorgeous trade. All right. To go back again, so this is to avoid that the video is too long. All right, so we have been talking now for 51 minutes. All right, we started by preparing ourselves for day trading. All right, on a daily chart, we have seen that we have an expanding triangle, which is a corrective wave. All right, on a daily chart. And the expanding triangle in this case is also A, B, C, D, E chart pattern. All right, let me remove my Fibonacci lines. All right. So the expanding triangle is also A, B, C, D, E chart pattern. We have noticed on a daily chart that the Dow Jones Index is on the way to reach the upper side of the expanding triangle. All right, I'm going to remove also. So, all right, are you with me? Okay, on the daily chart. Okay, you see the gray line that I've drawn here, the gray line, too many lines. I hope you can see what I will do now. I remove these two red lines here. Okay, here we are, a little bit better. So on a daily chart, this we see A from here to here, A, B, C, D, E. The price is heading to this section here, where I put the spot here. All right, with the area wave pattern, we can forecast what the price is likely to do. But we will wait until the price is doing exactly what we are expecting. Okay, that's why I recommend to traders, highly recommend to traders, okay, to watch the video, okay, that we call Elliott wave Dow Jones trader is using expanding triangle like a pole. I'll put the link in the description section for traders. Okay, so it's heading towards this section here, and when it reaches this level, our expectation that will come back down to the lower part of the expanding triangle, preferably down to the level of 155.51. That remains to be seen. So if you want to know more how to trade this instead of just jumping on it, watch that video. Elliott wave Dow Jones trader is using a expanding triangle like a pole. In that video, I expand the subjects for traders a little bit deeper, okay? So, but for today, for day trading purposes, talking about an Elliott Wave Practitioner is live, okay? Day trading, a major stock index. In this case, the major stock index that we are trading is the Dow Jones Index, okay? So, we have seen a pattern. This is our setup. The setup is a spanning triangle that is not yet completed on a daily chart. And then we have highlighted the high, the low, and the median line of yesterday candlestick bar on the daily chart. This is about trading idea part 1, part 2 for TST traders. All right, so you can go back again to our website, best-trading-strategy.com, tstwsy008.com, and trading idea part 1, part 2. We highlight this key level. Why were we doing that? Because we want to use the 5-minute time frame for our entry and also for our signal. So, talking about the entry, we want to have analyze the time of the day, the place, and what is happening. I have already explained to you what I meant by that. So this is what we have done, okay? And apart from that, we have also noticed on the 5-minute time frame that yesterday there was this bullish progression that break out of the consolidation on the 5-minute time frame, which we will label normally the first Elliott wave. But it has been cancelled. Following our Elliott wave count guidelines, if a wave is cancelled, we must restart counting the wave. So we will start like this first new wave, but it also being cancelled. Okay? So we have a new first Elliott wave, which are labeled now here into pink, from here all the way up here, which has been subdivided into 5 mana wave. First mana wave, second mana wave, third mana wave, fourth mana wave, and the fifth mana wave. Now, this is the first wave. So far, with the information that we have, my friend, that's all we can say. So tomorrow, if the market change direction, market sentiment has changed, price went back down, you say, oh, Joe, what were you talking about? With the information that we have today, that's all we can work with. And it worked beautifully for us so far. The most important thing, we did not violate the market pattern, even on a 5-minute time frame. Okay, so if I draw a bigger blue channel like this, okay, so we have now a channel on the 5-minute chart. It is a rising channel, yes or no? Now you understand why I have too many lines on my chart. Okay, you see now? So there's a channel being formed. But as the price going up, we must acknowledge the resistance level. So you buy, you want to know where is the first target, and here resistance level. So we use also the triangle to set a target at 16980. We also observe, okay, the resistance on our entry time frame, which is 1 here. All right, you see now? So here it stopped nicely. I'm out of this trade because the time of the day, okay, talking about the time, London is now closed, 23 minutes so far, and it's good to come out of a trade with more than, okay, 50 pips. Great stuff, isn't it? Okay? All right, makes sense. So what we are trying to do is to show traders what is happening behind the scene, what we are discussing on YouTube, and when you are applying it, what to look for to avoid trading mistake and to make a better trading decision. Okay? All right. So if you find this video useful, okay, please give us the thumbs up. If you find it so useless, all right, please give us the thumbs down. All right. If you have any comment, put in the comment section. All right. No spamming and no spamming in the comment section, please. All right. And all right. If you want us to record other video regarding other subjects relating to the Elliott wave theory, okay, put it in the comment section, please. All right. If you love this video, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our videos, subscribe to our channel. There is a link in the description section. Okay, check it out. Okay, so you may stay tuned with us and watch more tutorials for free. Okay. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott Wave Practitioner. Is live trading a major stock index. Speak to you soon.